What is going on, my friends? Ryan Williams here, back with another one. And in today's video, we are going to switch things up a little bit. And instead of talking about like the best dividend stocks to buy or stocks that are currently at a discount, we are going to zoom out and talk about dividend investing from more of like a big picture point of view. Specifically, we are going to do a deep dive into 3 dividend investing mistakes that are pretty common, especially amongst beginner dividend investors. And just so you guys know, all of the 3 mistakes we're talking about today are ones that I personally have made in my short dividend investing career, and I'm sure a lot of you more experienced investors have made these same ones as well. At the end of the day, guys, mistakes are obviously inevitable, but hopefully by hearing other people talk about their mistakes, it can help you avoid making the same ones in your own investing journeys. And also, guys, later on in this video, we are going to be doing a quick Q&A. I've been getting a lot of great questions from you guys in the comment section of my videos, so we are going to run through a couple of those at the end of this video, so be sure to stick around for that. Anyway, before we get rocking and rolling, if your favorite type of income is dividend income, go ahead and give this video a big thumbs up. Also, if you're like me and have a soft spot for dividend stocks, I'd ask you to consider subscribing to my channel as well. All of the videos I upload here are on the topic of dividend stocks, most of which are dividend analyses and updates, as well as special inside looks into my own dividend stock portfolio. So if that's something you'd be interested in seeing more of, go ahead and hit that subscribe button for me. I'd love to have you all along for the ride and have you be a part of my dividend investing journey. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, guys, now if you saw my last video, you will have heard me mention this new dividend stock Discord server I recently created, which essentially, for those of you who aren't familiar with Discord, it is a big group chat for dividend investors to come and join for free. And all we do is talk about dividend stocks, guys. There are a lot of really fun chats within this Discord server, like the highest yielding dividend stocks or stocks that are most at a discount, or talking about ETFs or even market news and market predictions. There's just a lot of really cool stuff going on. So if you are interested in joining, once again, it is completely free. Anyone is welcome. You just have to have an interest in investing in dividend stocks. But anyway, there is a link to it in the description of this video. Just go ahead and click that and you will be sent to a page where you can basically join this Discord server, this big group chat. So anyway, let's definitely keep the conversation going, keep learning, keep evolving, and keep connecting with other investors, because that's what it's all about. It's a really positive, like-minded community, and we're all here to help each other grow. So if you want to be part of that, link in description. All right, guys, now let's get into the 3 biggest mistakes that you should avoid as a dividend investor. The first mistake is not doing your homework, not doing your research. Now, obviously, guys, you see all my videos, you hear me talking about the best stocks to buy in this month or the stocks that are currently at a value at a discount. I, along with other content creators on this platform, are always putting out videos talking about dividend stocks. And while we all make them seem like enticing purchases, there are a couple of important things to remember. When we put out these videos, when we talk about these stocks, these are our own individual opinions. When I talk about what I think are the best stocks or stocks that are at a discount, that is my own opinion based on research that I have done. And with that said, take it with a grain of salt. Don't take it at face value. Verify for yourself. I think these videos and articles and wherever you get this information, it's a great place to start, but always, always, always do your own research. And at the end of the day, make your investment decisions, choose your stocks based on conclusions that you personally draw for yourself. Anyway, that was point number 1. Point number 2 is that dividend investing can be subjective. Just because I think a stock is good and just because I'm adding one to my portfolio does not mean that you should do the same necessarily. Everyone's portfolio is different, as is the way they analyze stocks. And as you gain more experience and spend more time with this stuff, you'll come to develop your own method to the madness, which I think is part of the fun. And to expand on this a little bit more, guys, if you base all of your investment decisions on what other people think or what other people are doing, I think you set yourself up for a lot of stress and uncertainty and overthinking and possibly even bad decisions throughout your investing journey. One of the 4 sure things when it comes to investing in really any sort of stock is that the market is going up and down. It is always doing its thing, guys, and there is no way of telling what it's gonna do. Every day is different. And if you haven't done your homework on the stocks you're investing in, or don't understand the fundamentals of these businesses, because that's what stocks are. Stocks are representative of actual tangible businesses. It increases the likelihood that you're going to make bad decisions and maybe make a reactive decision when bad things happen. Because with any stock investment, guys, there's always going to be undesirable things that happen, whether it's bad news about the company or maybe the stock isn't performing performing very well for a period of time, just as far as the share price goes. But if you have a good grasp on the fundamentals and understand that that is what makes a good investment, you'll most likely experience a lot less stress along the journey and make a lot less bad decisions when these bad things do happen, because it is very easy to get concerned or get wrapped up in the constant news that comes out. The news cycle never stops, guys. There's always things going on about these companies. And if you're investing in 20, 30, 40 plus companies across a long period of time, that's a lot of news to keep up with, and chances are it's not always going to be good. So my overall advice for you guys to avoid this mistake of not doing your homework is simply to do your homework. And I know a lot of you guys just getting into this don't really know how to research stocks, but like I said, there are a ton of great videos, great podcasts, great articles out there that can help you learn how to analyze these dividend stocks and can help you figure out what to look for that makes for a good dividend stock investment. So if you're just getting into this, I would put a lot of your energy into learning the ropes and make an effort to understand those things, because dividend investing really is a long-term game. And so these are important skills to pick up on and important skills to know if you're gonna be in it to win it for the long haul. And that is a perfect segue to the second mistake that I'd like to talk about in this video, which is not thinking long-term. I will be completely frank with you guys. Dividend investing is not a style of investing if you are looking to get rich quick or are looking for 1000% gains in 1 month's time or in a short amount of time. This is not for you if that's what you're looking for. Dividend investing is a slow burn. And trust me guys, I get it. That may not be something that you want to hear. It is so hard to stay patient for 5, 10, 20, 30 plus years, especially when you see all of these other people out there making a 1000x return in 30, 60 days off of like a meme stock or some of these weird named cryptos. But like I said, guys, if that is the type of return you're looking for, dividend investing is not for you. You need to approach it with a long-term mindset. You need to get into it with the realization that I'm going to be doing this for 5, 10, 20 plus years minimum. I apologize if I went on a little tangent there, guys, but that one is very important. You cannot have any success in dividend investing if you don't have patience and resilience, and also if you are not consistent, which leads us to mistake number 3. Just like everything else, dividend investing takes consistency. It takes regular contributions every single week or every single month. To have success as a dividend investor, it's something you need to chip away at. Like I said, every single week or every single month, probably one of those two. You need to contribute to your portfolio on a consistent basis. To be successful, really at anything, it takes consistency. I mean, if you have certain fitness goals, for example, that you're trying to reach, you don't just work out like once a week, right? You're in the gym 3, 4, 5, sometimes 6 days a week. You are consistently there. You're putting in the hours. And there's a lot of symmetry between that and investing in dividend stocks, in my opinion. Both take consistency, both take a lot of time to see results. You don't see results from working out just in the first week or two. Sometimes it takes a few months or even a few years. It also takes a lot of discipline, guys. It's not easy to contribute money to your portfolio every week or every month when you think of all the other things you could be buying with your money, but you do it today for the betterment of tomorrow. And with that said, guys, now I'd like to switch gears a little bit and jump over to the screen just to show you how important being consistent is with dividend investing. It makes such a huge difference over the long term, which you'll see in just a moment. All right, guys, what we are looking at here is the dividend calculator on marketbeat.com, which is a really handy free tool that allows you to sort of project your future dividend income based on certain variables that you can plug in here. So for this example, guys, I want to show you a comparison between someone who maybe just sporadically invests some money into their dividend portfolio versus someone who consistently invests into their portfolio. So in this example, guys, we have someone who is going to invest an initial $1,000 into a dividend portfolio. And this portfolio in this example has like an annual dividend yield of 3.5% that grows by 6% every year. The dividends grow by 6% every year, as well as the share price appreciation that also grows by 6%. So this person, like I said, is sporadic in their investments. They're not regularly contributing to this portfolio. This is the type of person who maybe they get like $100 for their birthday every year, and they're like, okay, I'm just going to invest that into my dividend stocks. I'm just going to put that $100 every year and call it good. So let's click calculate dividends and see how much money this person will end up with and what this person's portfolio will look like across 20 years or after 20 years. So in the very first year, guys, this person is generating about $35 in annual dividend income. And at the end of that first year, they'll have about $1,200. So not too bad for the first year. So let's go all the way down to year 20. And it looks like in that 20th year, this individual who is sporadically investing $100 of their birthday money into their portfolio, they'll have an annual dividend income of almost $350 and a portfolio value of almost $11,000 right here. Now, in this next example, we're gonna have basically the same exact portfolio, starting principal of $1,000, 3.5% annual dividend yield, and then same dividend and share price appreciation. But this person instead is deciding to contribute $10 a week to their dividend stock portfolio. Only $10. 2 trips to Starbucks. They're ditching the coffee, they're brewing it at home from now on, and they are putting that money into their dividend stock portfolio. So this person is making regular contributions to their portfolio, and let's see how their portfolio looks after 20 years in the same amount of time. We're going to compare. So let's scroll down. In that first year, they did the same, okay? $35 in dividend income, but their portfolio balance is considerably higher, about $500 or $450 higher, somewhere in there, just from contributing more to this portfolio. They're able to buy more shares of stocks, and those stocks are appreciating, which results in them having more money in this first year. Now let's scroll down to the 20th year and see how things are looking. So instead of generating about $350, right, which is what this first portfolio did, in the 20th year, this regular contributor is generating 3 times the amount of dividend income, $1,000 of dividend income after 20 years, and their portfolio is also 3 times higher. Instead of having like 10,500, was that what it was? Yeah, oh, 10,750, I'm sorry. They still have 3 times the amount of money in their portfolio, just over $32,000. So in this example, guys, it's fair to say that the person who regularly contributed to their portfolio did considerably better than someone who just sporadically invested some money here and there. And really what it is, guys, is the main difference is this annual contribution, $500 a year contributed versus $100 a year contributed, or in this example, $10 a week. That's really what makes the difference here. All the other variables are the same, but I can tell you this, for a lot of people, it is easier to stomach investing $10 a week, something small like $10 a week, than investing every single year a lump sum of $520. That's a bigger amount of money to let go and put into something like this, and it's harder to wrap your head around. So $10 a week is a lot easier to stomach for a lot of people if you're making these regular contributions. But that is where the difference lies. And I know, guys, scrolling back down, $1,000 in annual dividend income after 20 years is peanuts. It's not a lot of money for that amount of time. And 32 grand, that's a good chunk of change, but still 20 years, only $32,000. Come on. But really, guys, I used this number here, this $10 a week, because I figured everyone out there should be able to contribute just $10 a week to their portfolios to put into something like this for the betterment of their future. And seriously, if you are someone who feels like they can't come up with an extra $10 a week to start investing or to contribute to their portfolios on a regular basis, even if it's $5 a week, if you don't feel like you have a penny to spare, seriously, leave me a comment below or shoot me an email. Somehow, one way or another, please get in touch with me, because I genuinely would love to help you through this and help you figure out a way to come up with those few dollars every single week to put into your portfolios, just to get the ball rolling. Because really, at the end of the day, guys, something is better than nothing, even if it's $1. If you need help figuring out a way to bring this to fruition, to make this happen for yourself, seriously, leave me a comment below or shoot me an email. However you can, get in touch with me. I legitimately would like to chat more with you about this and figure out a way together to get you to a place where you can contribute this amount, because guys, even an extra $30,000 in 20 years, that's better than nothing. And it's only accomplished by starting today, by starting now, by taking action. At any rate, guys, let's look at another example of just how powerful consistent dividend investing can be. Let's use a higher amount of money though, a higher regular contribution every single week. So I'll use my weekly contributions as this next example, guys. So I personally invest $150 every single week, which, by the way, I have not always done this. I started with a very low dollar amount. I started investing $25 a week and worked my way up to this amount. Anyway, let's use a $150 weekly contribution, which amounts to $7,800 a year. And let's see what this individual's portfolio would look like after 20 years with that amount of regular contribution. So let's say calculate dividends and scroll down and see how things are looking. So this is looking a lot better, okay? So instead of having basically a $1,000 annual dividend income from investing $10 every single week, this person will have $13,000 of annual dividend income and will have a portfolio value of $405,000. That is crazy. And just in that 20th year, this individual will have gained about $22,000 just from the share price appreciation of the stocks that they own. That's crazy, guys. That is so wild. So this all just goes to show how important being consistent with your investing is. And like I said, you can start small. You can start with $5 or $10 a week and work your way up as time goes on and you're able to generate more income and contribute more to this. Anyway, moving on to the next segment in this video, we are going to be doing a Q&A, and I have two great questions lined up for you guys today. The first of which comes from Taylor Green, who wants to know, do you invest in crypto at all? If so, what crypto do you hold? And to answer the question, no, I don't own any cryptocurrencies at the moment, and that is for a few reasons, actually. Number one, I don't completely understand cryptocurrencies just yet. I don't really know how it all works. And to be fair, I really haven't taken the time to do much research into it. I feel like I've been so busy learning these dividend stocks and putting my energy into both these dividend stocks and these videos that I'm making that I haven't been researching any cryptocurrencies or anything like that. I may invest in them at some point in the future. It's kind of on my to-do list, but it's really not at the top of my priorities. I'm very content continuing to invest in dividend stocks. And also, if I'm going to be putting any of my pretty limited funds elsewhere, it is going to be into buying more real estate, which is something that is on my radar. I know I don't talk about that really on this channel. We just talk about dividend investing, but I'm also into real estate and would love to grow my portfolio with a little bit more with that and buy a couple more properties hopefully in the next small handful of years. And to answer the second part of this question, if so, what crypto would I hold? I don't know, I'd probably just go with the standard Bitcoin and Ethereum. I don't know, nothing crazy. I know there's some really freaking crazy ones out there with just the wildest names, like Disco Kitty. I don't even know if that's an actual one, but I wouldn't be surprised if it was. I don't know where I came up with that name, guys. I'm losing it. Anyway, Taylor, thank you so much for the question. That was a really great one. Hopefully that sufficiently answers it for you. If you have any more questions for me, I'm happy to answer them. Just leave me a comment below. Anyway, moving on to the next question. That is from my friend DP, who wants to know what is going on with Verizon. What in the world is happening with ticker symbol VZ? And I gotta be honest with you, I have no idea. I don't know why this stock is just continuing to plummet in share price. Just in the last year, it's down 8%, guys. And you can see from the screenshot here, it's looking like the bunny hill at a ski resort. This stock is going down so much. So I don't know exactly why that is. I mean, it is pretty much touching the bottom of its 52-week range, and I wouldn't be surprised if it actually hit that. And it's now in the single-digit PE ratio range. 9.84 is what we're looking at on the screenshot here. The only real negative piece of news that I can see from Verizon is that they missed on their revenue from their recent earnings report, but they did beat their earnings per share and are raising their profit prediction. So that overall is pretty positive news. But otherwise, I really can't see what the deal is with Verizon. I don't know why it's coming down in share price. But also, if you've seen some of my recent videos talking about AT&T and Verizon, pretty much the three big players in telecom are all down, at least in the last 3 months. AT&T is down, obviously. Verizon is down, as we saw here, and then T-Mobile, ticker symbol TMUS, has also come down. Actually is down more in share price than both AT&T and Verizon. It has been performing the worst across the last 3 months. I've tried to do some research into Verizon and AT&T. I know what's going on with AT&T. That's pretty easy to see, but I really can't tell you what the deal is with Verizon. If any of you guys out there have insight as to why Verizon just keeps going down in share price, please leave us a comment below. Let the community know what's going on. I think it's actually a question we're all dying to know the answer to, because just from speaking with you guys in the comments of these videos and on community posts, a lot of you guys right now are buying Verizon. A lot of other creators out there, a lot of other dividend investing content creators here on this platform are buying Verizon too, from what I can tell. So, I really don't know what's going on with it, but I'm personally just going to keep buying as it continues to go down, because I think it's a great company to own. And with that said, guys, that pretty much wraps it up for today's video. This was another relatively long one, I think. So thank you for sticking around with me till the end if you are still here watching. And hopefully you got something out of watching this video. Hopefully you took something away from the few dividend investing mistakes we talked about. I apologize if I went on a tangent or kind of ranted a little bit. Sometimes when I'm speaking off the top of my head, I do get a little carried away, but when I'm editing, I try and bring it all together and make it pretty cohesive. So hopefully it all makes sense. With that said too, I'd be very curious to know, what are some of the investing mistakes you guys have made along the way? I'm sure everyone out there, especially you experienced investors, have some that you can share some of your wisdom with us. So leave me a comment below. Let me know what some of the mistakes that you have made are. So hopefully the rest of us can avoid making them. Also, once again, guys, please be sure to check out the Dividend Stock Discord server that I was talking about earlier in this video. The community there is growing every day. We are getting new members, new people coming in who just want to talk about dividend stocks and share their info and share with you all of their favorite stock picks and what they're buying and selling. There's a lot of good stuff happening in this Discord server. It's been a lot of fun so far. I'm so glad that I made it. It was a lot of work to put together, to be honest with you, because there was some coding involved and I'm not good with that stuff, but I'm so glad that it is up and running, and I'm so glad to see some people starting to join over there. So hit the link in the description if you at least want to check it out. If you don't like it, you can always just leave. It's not a big deal. But I definitely think it's going to be worth your while if you are interested in dividend investing, and especially if you are someone who comments on these videos pretty regularly. A lot of you guys who do comment on these videos have already joined. So it's just another great place for us to continue the conversation and share our dividend investing wisdom and experiences and sharing our feedback with each other, because that's what it's all about. We're all learning together. We're all growing together. And, our portfolios are all going up. At least our annual dividend income is. So link in description if you guys want to check that out. And with that said, I will now get out of your guys' hair. But thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one. I'm really looking forward to it. I can't wait.